Hello and welcome, as it is Saturday, 27th day of January 2018. My name is Derek. Welcome. Everything you do within your own risk and own reward. I'm looking first at the code IOC. IOCoin is what it stands for, and it's had about 7-8 consecutive red candle down moves, going from about 62,000 Satoshi now at about 37. So it's pretty much lost about half of its value, very close to it. It could most likely, I'm not going to say most likely, could very easily and possibly for sure lose more, maybe even come back down to this previous support. If we look at this chart in its entirety, which has got a decent amount, so let me just do a different time frame. It's been holding for the entire late end of 2016 and still in play, this level of support. But here's the beautiful kicker: failed move, fast move. Possibility, of course. Okay, here's your key level of support. This is the very noticeable move that gets caught back into this band relatively quickly thereafter that. Usually in these situations, within the next 2 to 3 periods, or basically into February sometime, you would expect this thing to make a move above the 18 average, and then at least have a test of what I would condemn the next key level, in this case its previous high. And of course it could very easily do further than that. So that is the weekly chart. And let's go back to the daily chart, talk about trading. This is going back to about a year ago, March of last year. If you were to look at this market, you should be having your eyes glorified within some of these moves where you can be putting sell orders in. But you might want to wait until this has a decent move, maybe to the 18 average of lows or below, before you buy. So the market moves. Maybe you can get in at this point. If you're waiting for a lower price, you had an okay one here. But even getting in at this point, at the close of 37, if you're able to put your sell order in here, you got your first trade immediately won the next following day. But we'll assume that maybe you were buying here but looking for better gains, ready to buy on lower prices. Okay, so there's a case where you have some okay gains. Maybe you sell a little bit, realizing and go down and get cheaper prices, also realizing you could easily go higher. Okay, back down. You could buy it back, but 45 is the price there. We can see it was 54. So you're looking at about under a 20% move, but I didn't know this was going to happen. But if you wait for a move to the 18 average of lows or better, sometimes you'll get it. Well, there's an easy spot to buy. If it goes even lower, you can accumulate more. Well, there's a spot where you could decide, maybe I accumulate, there's a time, but it's why I want maybe a bigger break below the support. I could understand that as well. And if you did buy there, there's an opportunity to sell. Of course, you still want to have your buy and sell orders ready. So in a situation here, either your sell order already activated the play, or it bought based on buying down here, you were able to do it manually at whichever time frame around May the 3rd. And then of course buying here or selling here meant you're able to buy at this 18 average of lows into May very easily. Market moves. And if you're buying at the 18 average of lows, I really am not too enthusiastic about buying, as it's at the 18 average of highs or barely above it. If I bought deep below there, then maybe. So the market goes higher. So there's a selling spot here. You can sell one day. You can sell the next day. The next day you don't do anything. The next day you don't do anything. This day you don't do anything. Don't do anything here. Don't do anything here. Not yet at the lows. Although, had I known, I would have bought, of course. Now the question is, you're leaving some back here. Were you able to? You're definitely able to buy here. Getting too greedy, you can see causes you a situation in having not quite as many tokens, making it very difficult to sell at these areas. And prices then head back lower. Now you can end up buying at what is barely higher than this price. Maybe buy some more, especially if you had a buy order here. If you haven't bought yet in this area, you got some time to consider it. And now you most certainly should have had a buy order in by now if you haven't bought. So the market moves some more, now just hanging in with the 18 average, falling below the lows. Is it going to go lower? No, a little bit. Barely above it. Now a situation here, had you bought barely, nicely below the lows in here at 29, there presents a selling opportunity at 37, whereas if you get that, you could buy it back next, I would have to say, breaking the 18 lows. But definitely a selling opportunity exists here at 51. Even if you had some, you could sell some at 44 the day before. But you don't want to buy, and here is a situation. 51, close enough to the 18 lows. You can get in there and sell again if it goes back over 50. Because if you bought here, you would have more. You could basically do such where if you didn't, you don't want to run out of them, so you don't want to sell any more at that price. And there you go. If you bought, you could consider selling, but I would wait another day. And, well, it's a difficult situation because this thing looks like breaking out. And that's where if you're like, oh, it's breaking out, but if I'm safe to buy or sell here, now you can buy back when it hits the 18 lows here. And then time moves again. Buying on the 18 lows at 48, you could sell at 56, but maybe you want to wait for a break of this resistance and a huge green up candle. Not coming yet. There it is. I didn't know it was coming. I just realized they happen a lot, so you sell. And then you wait. Maybe you sell some more or for a bigger push. And that's pretty big, so you could sell at one of these highs in here, or two of them. And selling up at this high in here, it's 107. Buying back at 80, that's better than a 20% gain. But if you sold like 3-4 times in a row, or 6 of your last 7 orders have been sell orders, you can only buy like a little bit here because you only sold a little bit up here, and you really can't do much unless you have a decent sized move down to about here. And that's that decent sized move. So you knew on this red candle down day, this was a buying day. And if it goes down further, you're going to buy more. If it goes up, we see the price above the 18 of highs, then you're going to sell. Was this enough of a down move? I would have to say consider it yes. At least if it's not enough and you put a buy order in here because you're like, okay, this is where the support is, but I think I can go a bit deeper than that. The answer would have been right down to, at least on the next day, 40,143. And there you have the situation where if you're buying around 40 something, this closes at around 60, this closes at around 70. And the 18 average of lows, it comes back down and you're buying cheaper prices. Breaks down support. One of these days you should be buying. And buying down here at 32, if you're able to catch it at the right time, maybe you can get this sell order, but that could be hard to get though. And now day like this is a buying opportunity. Another buying opportunity. And then the market's got a nice bullish pattern. Buying down here means you can start selling again. And if you did sell, maybe you can catch this one. But like I said, with that sale, some of those orders are hard to fill. This would be a hard order to fill there, this 18 average of lows. Even if you had a buy order in, you might have barely missed it. And there you got more selling that comes up after this here again. And when you did all of this buying in here, you're going to accumulate a lot of coins, which means you're going to have good inventory to enable you to have your sells in here. And another sell order may be coming up there. possibly another one here, but unless you're buying at the 18 average of highs, you're in a stage where you would be not accumulating too well, but it's back down the 18 average of lows now. So if you did sell in this point, you could start looking to get in. But you got a long ways to go down, a lot of buy orders to be filled before I would be comfortable. Well, definitely, but to get your shares back or tokens back. There's a lot of buy order or a lot of fill area in here that can be used when we look at this market. So as far as an entry position in now, I would probably want to wait for the more longer term time frames to have a bigger correction. I will not enter IOC at this time. What I've done is I've went through some of the top losers. IOC happens to be the biggest one of the week. With BCY, what's the name of that one again? BCY, I know it. It's Bit Crystals. It's down 23.4. Let's take a look at that. And on the 3-day time frame, it shows a lot of the same in here. As you had a big decline, and on the situation here, it's coming close to the 18 average of lows. The daily chart, and again, using the selling strategy, meant if selling it around anywhere at this 12,000 area, 10,000 plus, meant you bought at the end of this day or somewhere near this 18 average of lows, or pretty much any time now. Although we see what could be a bearish setup in here, when we look at candlestick analysis, case by case, you go from point high to point low to the spot here, back to 18 high. Then in this point in here, you not crashed, but you managed to move back to the rising 18 lows. But then 2 neutral days of doing nothing, thus making the 18 go sideways, showing neutrality. A little bit of small red candle down that basically tested this previous support. The previous session had a move, a green candle up to the 3-day resistance point or period, and now we see it falling below. So that's definitely a bearish situation as I would look to it. As far as entry positions, well, 61.8% down, so you'll be looking somewhere around 5,000. That's the general rule of thumb. You have to ask yourself, is this a coin that is at least going to stay around and do what it's been doing? And if you think it's one that's going to remain bearish, then you're going to want to look at 2 different places to buy instead. One, previous low. 2, Fibonacci downside, which is this high divided by the low. So it's basically 131 into 23. So we're looking at about 6 maybe, to the root of negative 0.618. Multiply the low again. As far as the calculator that I can get, I'm just going to put in, say, 13,000, I guess. And for a low, 23. Downside target of about 789. So if I were to be playing this and I think it's bearish, I'd have a buy order at around 200 and about 750. Those would be the 2 buy orders that I would be placing in. I don't know any fundamentals about this. I do see some interesting volume here at this bottom, and I don't think I should ignore this. So I'm probably going to look more into this because the sell-off and all this again is occurring on lighter volume. What did the volume look like beforehand? It's been continuously getting bigger the whole time. More and more participation. And then it just scorched on really that it's not, it's on this smaller green candle up day. Very, very interesting. I'm going to look more into that later on. Let's look at in INFX next. Influx coin, which has had a situation of you got to look at these, a lot of these sticks higher. It's going to look nice on the daily time frame. Definitely one worth considering for that strategy that I talk about. And definitely for always the buy low and sell high, but definitely within these as well. But within this situation, we have holding and staying above in here at this previous point. The possible failed move, fast move, where it's broken down. Let me just look at this better maybe on a 3-day chart. The failed move, fast move situation. Here's that key level of support which matches up with this resistance. Comes down in about 20 plus periods. It's pretty much had less of amount of that time. If this thing relatively quickly over the next 7 to 9 periods, which represents the next month or so, can find a way to get above here, that might be a very, very interesting situation, to say the least. Let's look at this on the daily chart. And within such, the move was relatively straight up. There was barely a touch of the 18 average of lows from the time where it left here to this top. There wasn't even a touch of the 18 average of lows to this point. It had a decent amount of correcting in here. Will it have another one? This little pattern of this cup is definitely not a bullish one. There's a lot of this gap fill area in here. So something I would not want to be a buyer of at this time. Unless, of course, you want to play within this strategy and you realize it's going to go down more and you're ready to buy more if the price goes lower. So you're ready to buy maybe at a higher low in here, matching low, and even for that matter, breaking down below. We go back to just in here. And I like going back to this time frame because this is around the area where I started. If you're buying in at 1366, time goes by. You were able to sell at 1769. Even if you passed, okay, 2610, I'm going to sell some. Look to buy back if it goes lower. Next day, do nothing. Next day, do nothing. Nothing. Although, nice bullish setup for more gains. Not happening. I could buy back what I sold at the top, but not yet. If you have the buy order, oh, you got it. You got it. And that was a situation where orders rule here. Because if you just happen to leave the computer, or you've seen it on this day and you wanted lower prices, then the next day all you got was a little bit cheaper when it did go lower. Well, you can see here that that would have been an interesting situation. Because had, say, for example, you had a buy order at the 18 of lows. You've seen here the 18 of lows was rising at around this number here, 1619. So like, yeah, 1651 is a good number. And 1651 was most certainly a very good buy. Then when the next day ends at 2500, you can most certainly go for a sell. Look to buy that back if it comes down again to the 18 average of lows. You might as well put a buy order the next day for like 1701 or 1710. keep that order in. Don't want to buy yet. Keep it in. Maybe you can increase your buy to 18. Of course, if you did so, it would, in this case here, just curious, the low was 16.90. You would have got it for the first time at that 17. Either way, you have now arsenals to sell. You don't want to buy until it comes back down, probably down below this previous level of support. Market goes up. Buying at 1700 means I can easily sell at 27, or I can say, you know what, this looks like a bullish setup. I think there's a good green candle coming up soon. Of course, sell orders you would have hit, because the bullish setup doesn't look that great anymore. And playing the game within orders again, selling up here around 3,000 meant on this day the 18 average was in at 2100. So you're like, yeah, 20. Well, it closed at 2116. You know it's rising, so like 2201 buy order hits. And then, well, if you have sell orders here, like I would easily have had a sell order here, and maybe you have another one fill again. If you just happen to log on to the computer and you see this, you gotta sell. You just gotta sell, and then you can sell some more. Wow, what a huge gain this was last year. You get the big days, situations where you can literally day trade the 1 minute time frame and pick away at 4% gains really easily now. 7-10% gains over 10 minutes, let alone better gains than that in that time. Markets move. See, if I sold up here, I don't think I would sell here, although I'd probably have a sell order ready for maybe 135 to 150. And markets now continue to go down. 18 average of lows. That means you can get back in for any of the selling that you did up here. As it's now back to the 50s. We can see selling here was at 80. Now you don't want to buy until you come back to this previous key level of support. And buying at the 18 average of lows now means you can sell when it breaks if it does the 18 of highs. Here's a situation. Did it come back to where you bought? Maybe. But here's the deal. The day's over. If you happen to be at the computer at this time, and assuming you have a buy order in just somewhere around here, you have a decision to make. Are you going to take what's offered to you now or keep your order as is? Because we can see that by taking it there enabled you to, I guess you could sell at this price if you want, but when you see a pattern like this, where you have one red candle down like this and even a bit bigger of a big green candle after it, keyword, bit bigger, because the bit bigger means that upward momentum could very easily follow afterwards. Of course, in this case, not so much. At least not at this time. That time it did. You log on to your computer this day, you sell. Now, in situations when the market goes sky high in one day where it like doubles, then you could, on this particular sell order, look for 50% off. I mean, the 18 average is way down there. Definitely 30-40% off for sure because the rising 18 average. But if further sell orders come in, then you're going to be, and I mean in the meantime, like the next couple of days after this, I'd be looking for even bigger discounts. If this thing can triple and I sell, I'm looking for 60% off, 65% off after, on that particular sell order. Of course, in this case here, you could, if you think the 18 average of highs is going to be great support, be a buyer, or you could cautiously or continuously wait for the price to reach the 18 lows. And it could still do so through time, where maybe 7, 8 periods, days go by, and this 18 average of lows reaches where it is now. And you'll just get that same price the following week or close to it. It's getting closer. Now here's a day where I'd probably just take it. Close enough. That's 6 consecutive red down days in a row. There's not much of a difference to where I'd want to be. I know I could there it is, easily get those prices, 7 in a row down. But there we have it. Sell, sell, city. There you go. Sell, wait to buy. There's your buy period right there. Or you could wait. Nope. Maybe. Buy where it comes in right here the day. But there's your selling. Again, great profit. Great profit. This is a great coin for this strategy, actually. And now you missed this buy because I wanted to go down to the 18 average of lows. If I did buy back here, then I'm going to sell. But because I sold up here, I want to see this thing break well past 40 for me to buy again. Didn't do it this day. This day, if I had a sell order in, that would have worked. But you know what? I probably would have went at least a hair under 50. There's a good chance I wouldn't have sold here. No, I would not have sold there. And then the market's going in the sideways manner. Again, sell opportunities here. You have it on the situation where you just have anything above the 18 like this and you hit. You can see you were able to get the winning play very easily. But now you're in a situation where it's grinding lower. One of these days, as it keeps going on, you're like, yep, I gotta be a buyer. If you sold up here, you already bought a bit back here. But how about for what you sold in here? Well, you bought it back here, so that was all fine. But there you go. There's a decent sized price, well below the 18. So buying here means you most certainly are going to look at the 18 average of highs for your next selling opportunity if it happens quickly. So this is a perfect day example. You set your sell order up on this day. It did not hit because your sell order would have been somewhere around a little under the 20 number. This didn't go there. So be it. Maybe you put it a little bit lower. Maybe you put it back, keep it where it is. Market's going higher. Now it's been a few days, establishing a level of resistance. And like I stated, I'd be looking for a fast move to the 18 average of highs after you buy below it. Been too much time now. I'm not going to sell unless it goes over the 18 of highs now. Goes lower. I don't want to buy here because I've already bought in this area before. If you got the sell order, then obviously you buy it back. If not, you continue waiting. Now, you had to have had that sell order hit. Because I'm looking at that, I'm like, you know what, let's be real here. You don't got a sell order that close to the 18, no, but you gotta have one in that much higher. Because think of it this way. If the market's like this, you ask yourself, oh yeah, if a move up here comes to like, say, 230, are you going to want to sell? Yeah. So then you got to have your sell order here. And then, of course, if you sell at 230, you could easily buy it back in here if you so choose. Or if you want to wait, good luck waiting for the 18 lows because it could very easily hit. There's the hit. So you either bought back on this day or on this down day here. And I didn't think I'd be going over a long, long look at one code, but we got a few months left. This is August of last year. This is a fun code, actually. Now it's doing nothing. Yeah, some momentum. I wouldn't sell there. Nice little pattern here. After a bunch of nothing going on, nice green candle up. Smaller but decent sized red candle down, matching green candle, and then a small green candle at the resistance level. Such a bullish, nice looking 4 candle setup from what preceded it. What happens after it? More bullish setupness. That kills some of the bullish setupness, but it doesn't make it bad. And now things are just getting neutral. again, what we got in here. So adjusting to the message of the market, there's a perfect example of it such. You're still on a buy, waiting for a significant move, like at least probably well below 10 in the 8,000 range or something. But that didn't happen because there's a spot where if you sold here, it's a questionable market. It's definitely in play. It should have got some here if you didn't sell the day before. There's your buyback. Lots of opportunity to do so. If you had this sell order, congratulations, buyback. And then if you bought back in here, you could have eased, if you, on this point here, didn't have any sell orders, then there's your sell day right here. And there's your buyback. And there's buy some more. Because it's a significant leg below the 18. That also means if you have in the next 2 or 3 days the price coming to the 18 highs, you sell. It goes down more. And there's another spot where you could have had a sell order in and barely missed again. And there's where you can unload what you bought down here. Looking, of course, hoping if you got tokens, which you should, that it goes up higher. But I don't really care in these spots, because if it goes up higher, great. I'll get a sell order, look to buy back later. If it goes down, I'll buy back, looking to sell it back later. And there you go. 2 days it takes to go from this high back down to this low. And of course, the buyback at that time. So there's definitely a buy. At least if you had buy orders, and that's the only way. I wouldn't buy here after seeing the move, because it rallied pretty good, and it's only a small leg from here. But to me, when you're managing your portfolio and you see that this is a key low, I mean, you should not have hit this bottom. You should have definitely been at 7,000 to 7,500, I would think. Even upwards to 8,000 as your buy. And even if you got 8,000 and it goes to like 64-ish, you're happy because you're able to sell order it the next day. This is a beautiful code. And I think one of the key strategies within this is for sell orders is you want to have probably 2. One decently above on your next key sell target, which is usually well above the 18 average of highs like we've seen on the early November day. And then, of course, an insane one. Maybe you'd have one up at 27 or upwards to about 39. That would be another place. And if you have enough tokens, you could put another one at 85. And if you ever need them, you can always cancel it to sell it or do what you need to do with those tokens. Okay, continuing on, a bunch of nothing going on. You got the opportunity to buy here. Not bad, not bad. And better opportunities coming in December. So there definitely should have been some buying. If it wasn't on this day, maybe the day after, maybe the red candle down day after the green. And there you go. So buying in here, you can start selling on this day. And you see a situation of this grinding higher. So just every so often, you're going to be looking to sell, realizing that you want to manage what you have well, ensure you're going to get a decent amount of profits that you can be able to sell at big levels. But obviously, if you fill the buy order from in here down there, that's great. Maybe you bought down here so you can sell that up here. But if your last buy was down here, you might not want to sell that again till it breaks 100 or even gets up to 100. And there we have it, a big situation where definitely sell orders should have been placed in here, because if you're on this day, where do you place a sell order? Quite frankly, I would even think here. So there's a chance I would miss it. It would be close. I probably would miss that. Either way, if you go from this day to this day, there's nothing wrong with taking a sale here. And then you're going to be still looking to wait for the market to give you a buy signal. Nothing yet. Nothing yet. Although some sell possibilities come in. There's the big wick up here, big move. If you're able to catch this, that's an interesting thing, because now you're in a point where the market in this stage is going day after day, riding the 18 average of highs exclusively. At least you bought a lot down here to give you inventory to be able to sell. You should not be running out of tokens by any means, but you should have a lot less than you had in the middle of December. And now you can start buying in here. This is a buy day. You wait, you wait, you wait. You want a decent sized move to buy, maybe down here, but I know we're heading into real time, and that's where we are now. So then, if you were to enter in a position like this, because of where it is, not bad, but where's the significant next leg going to be? Right around here. Where should your buy orders be in? Probably, I like the psychological numbers as it is anyway, so a little over 10,000 really does work well. Okay, I didn't think I'd spend too much time with these codes. THC, though, is an interesting one as well, though. I did want to talk about this the whole time, and I've looked at this one. I haven't necessarily looked at too many of them. But here's a situation in here where this thing just has a skyrocket large gain. 242 up to 5,000. Your everyday 20x how you doing kind of gain. In a relatively short period of time. And relatively short is about a month. Now we are looking at this market with a level of resistance here that was supported in here. This level of support has already been established and rallied from. Market seems to be heading towards there, and in a situation in which I pushed a button to try to stop it from drawing and it didn't push it, but in a situation where we get down to here, then what I'm looking at is it going to have a weaker rally? Because last time it went from point A to point B. Point A is the same variable here, but now you're going to maybe here instead, or just going sideways, and then, or even just immediately, you're going to have what would maybe be a next move to a significant point. When you have a 20x gain and you're in the selling process amongst here, and you're doing a whole you-know-what of selling here. You're at the opportunity where you can say to yourself, okay, maybe I can buy a small amount back when you're selling at 5,000, 4,000 in the 3,000 area. But I have an opportunity to get a good buy order in at around the 1,500 area, even down to maybe 1,000. After selling at 5 and 4 and 3, because that's what these markets do. Now let's go over MIST, which has been in a downtrend for pretty much its entirety. And here's a situation in which it was making a recent pattern of these higher highs, and it has, when it came down to this point here, it didn't even just go sideways. Instead, it's continuing its bearish pattern. It's set up this support mark in here, resisting it here, now trading within that area, and just that it's a bear market. So either I'd be looking for previous low or Fibonacci downside, which is basically 40,000 divided by 3,600 to the power of negative 0.618 multiply 3,600. I have no interest in it, so I'm not going to calculate it, but let's move on to the next one. EXP would be such, and this is its entirety, so it's just choppily moving around. This is great, this is fine, this is suitable. And I've lost my 18 average on here, so I'm going to show you how to get them on. When you go to indicators, you go to moving averages, and I want weighted for mine. I click it twice because I want 2 of them, and I can format it, change the number to 18, And I'll pick first, doesn't matter what I pick first, but we got all these situations. So I'll take high, and then we will make this the low. Okay, so within such, the level of support here had its rally to the 18 high. Now it's grinding below this 18 low again in the area of the previous support, which matched the same area before its rally. I'd be looking for a move to come back down to here. Let's move on to the next one. It is edgeless, and we're looking at its entirety, although I did trade it before it came on Bittrex back in the day. And it's in a situation where it moves well enough, so it's definitely playable. It's had a lot of this support test, or when I look at this as it plays through, support in here twice with rallies each time. Now it's not rallying as it's staying within this area. And if it does, I'm going to be cautious about any rallies that come up towards this point, upwards to the 18 average of highs. Because it wouldn't surprise me if there's a decent sized red candle like this down towards here that maybe comes and matches this area in here. And then of course the next support below that is the 18 or the previous low. I think short term, yeah, maybe you might be able, like I say, make a move up in here, maybe. But I definitely don't want to buy at this level because the time to do so is back in here. This is MoneyCharts on its entirety, which brings us to an interesting situation. And because of this, I'm going to take a look at this thing on a weekly chart so I can see, just see more candles this way. Or less candles, but with all the data that I want to show. It's an interesting situation because market's overextended on the situations, because you come down here, up here, down here, up here, down here, and up here. So you think even on a bullish level that you'd want to at least come down towards this area. And if it's going to be even more of a neutral chart, that's keyword. That's a conservative level, so even down towards here. But because of this level of resistance and how it's just supporting, resisting, congesting within this area, if this has a huge break above it, a big green candle, then I'll be talking about maybe later this year we might come back to here because we might easily have a 5-6x gain from where it stands. So it's at an interesting crossroads kind of situation where I can make a big case for a good decline of better than 60% or 2/3 of its value. But I would not be surprised that this thing could gain 30x, 25x, and a whatever significant decent period of time. Now, as far as this daily chart is concerned right now, if you're looking to get in for the first time, you know what, this thing doesn't really look so good or bad. I don't see any type of, oh my goodness, like the previous chart, this thing looks like it's going to break down and go lower, but I don't see any reason why it's going to break out yet either. So as far as entering into a position here, maybe looking to find a low in here, most certainly a possibility, but let's move on to the next one. And this is Melon, and another situation where this thing has had just an incredible gain. Now overall, this thing has managed to get back to its major support level that it had last year. This thing hasn't been around for too long, but you have this support level, now it's resisting it. So we're in a situation where breaking by this resistance, I've got a case or a target for it to at least go up to previous high. And then if this happens to be a level of resistance, and wow, this is 3/4 of an hour. Anyway, if this happens to be a level of resistance, then you'd be looking at your next point of, okay, this is where we came from. So this is the next key level of support here, which is previous low. Then maybe halfway, some sort of gap fill in here, and then again the previous low as well. This might be the longest video that I've ever done. Obviously it worked because I've had bad results sometimes recording longer videos, but most of those were with older computers. So thank you for tuning in and have yourself a great day. Bye-bye.